I got some pretty good questions here to go over. Hopefully you guys have had a chance to kind of see the picture, the screenshot that was sent in by someone, and so that's, I guess, going to be kind of like the main topic that I'll go over today. You know, the volume one, I covered this a while back on essentially using kind of doing ratio comparisons, and so we'll cover that topic again. You know, essentially we'll use kind of the ratio comparison, or in this case we're labeling it as a percentage type comparison of volume, and then the condition up top here, looking for the price movement. That's pretty standard, simple stuff. So this part will be pretty quick. But the volume one, you know, I'll go slow with that one and in depth with that one. And all right, yeah. So before I cover this topic, I've got one more that's a little simpler that I'm going to cover first. So let's clear the board here and get all this stuff out of the way. Okay, so this, to kind of set the question up for you guys, this question came in kind of dealing with option prices. So any of you who have been with NinjaTrader long enough knows that NinjaTrader doesn't do options. However, this user is you know, using, I guess, data provided by his broker. You know, you could also get data from another, you know, another charting platform. You know, there's lots of other brokers and charting platforms that, you know, give you options prices and the like. So let's hey, how about Apple? Apple's a good stock. So let's wait for that data to come in, and oh wait, we want daily data. Okay, we're gonna have to wait for that data to come in, and then we'll switch it to a daily chart. So while we're waiting for the data, what we want to know is, oh, there we go. So let's say we have two option strike prices. You know, one below the open of the market, and the other option price is going to be above the open of the underlying stock. And so let me switch this to a daily chart, and let's stretch this way out. So okay, so I'm gonna place my lines here that kind of represent the strike price of the underlying of the option. All right, there we go. So let's focus on the previous day here, and actually let me adjust my prices, because that is the opening price right there. So okay, so there, that arrow represents the opening price, and so I'm going to use the previous day's back. Let me adjust these strike prices here. Okay, there we go. So, all right, so we have, you know, two known strike prices here, and what wants to be determined is, you know, at the opening price. You know, I'm assuming the opening price for the day. We want to determine which strike price is closer to the opening price. Actually, here, I'm going to make this a little more ambiguous, so let's change that to 101. Okay, so there we go. So so now visually you look at this and it's not quite as apparent as which one of these strike prices the opening price is closer to. I mean, you can look at the price of the chart and do the math in your head and figure it out. But let's say you want the computer to figure it out for you a lot quicker. So we're gonna build this and let BloodHound kind of tell us which which strike price is closer to the opening price. So let's all right, open up BloodHound here, and let's name our system first. So we'll just take last week's BloodHound template and change the date for today. Okay. So what we're kind of the core condition that we're looking for is we're doing a comparison. Right, we're comparing the open price to the lower strike price, and we're comparing the open price to the upper strike price to determine which one of them is closer. So this is going to require two comparison solvers here. So let's set up our initial one here. So this will be the open to the upper strike price. Now since NinjaTrader doesn't have option price data available to it, the strike price is going to have to be entered in to BloodHound manually. So what we're going to do is we're going to use an absolute value, right, and that allows us to manually specify a value. So the upper strike price is 101, right? So we're going to set that to 101. Now the indicator B, right, is going to be the open price. So we're comparing the open price to the upper strike price. So to get the opening price, right, we're going to come down to Chameleon, and we want to use the open price here, like so. Now, I had to, in building this, I made a decision that I'm going to try and get BloodHound to give me a long output when the open price is closer to the upper strike price, and I want BloodHound to give me, all right, a short output when the open price is closer to the lower strike price. All right. So now that we kind of have our two pieces of data set up, now what I'm going to do is I'm going to clear out the outputs here, and the next thing I need to do is I need to adjust my differences here. So since we're dealing with a stock, we're essentially dealing with points, right? We're dealing with points, not so much ticks. So I'm going to change this to points, and I'm making an arbitrary decision here, and pretty much my assumption is that these strike prices are not going to be more than $4 away from the opening price. So I'm going to set this to 4 points, right? So for a stock, that means $4, right? 4 points is $4 in a stock. I could set this to 5 if it's possible that the strike prices might be more than $5 away. But if you're trading options on high liquid stocks, then you'll definitely find a strike price within $4. You'll actually find a strike price within $1 if it's a really high liquid stock like Apple. So I'll just leave this at 4. I think that's good enough. It gives enough variance for this. And so what I'm going to be looking for is when the further away the opening price is, right? Or yeah, the further away the opening price is, the smaller the BloodHound output. I want the output to be less and less the further away the opening price gets from the strike price. So I'll show you here in just a moment. So let's see. So remember, A represents our strike price, right, which is 101. So if A is greater than B, and remember, so indicator B represents the opening price, well, we're going to get a long output here, like so, right? So let's look at this output here. So all of these opening prices are below our upper strike price. Now, if we look at this candle here, I'll mark it with an arrow. So if we look at this here, look at BloodHound's output. It's actually the greatest, the tallest here, and as the opening price goes away, right, the output actually diminishes. So it's kind of an opposite relationship that I'm looking for. Oh wait, actually, I'm sorry, no, that's actually the correct relationship I'm looking for here. So yeah, that's actually working out the way I want. And actually, let me see what the opening price is on this. And oh, that's right. Yeah, so the opening price is down here. I'm sorry. I'm getting my opening prices confused. Let me I'm going to change the colors of the bars real quick. So let's make the up bars green so it's obvious what an up bar is. And we'll make the down bars orange or reddish. There we go. Take a look at that. Okay. There. Alright, so the red diamonds, right, are marking the opening price. So, as I was saying correctly the first time, right, this open price is further away from the upper strike price, but yet you see BloodHound's output is getting greater than when the opening price is closer to the strike price, right? We have a smaller output. So it's kind of the opposite of what I'm wanting, you know. As the opening price gets closer to the strike price, I actually want the BloodHound's output to be greater than. So that's how I want to be able to determine whether, you know, the opening price is closer to the upper strike or closer to the lower strike. Is, you know, I want BloodHound to give me a greater, a higher output to the strike price that we're closer to. So what I'm going to have to do is I'm going to have to invert this. So I'm going to invert this. Now if we look at the long output, now the long output's kind of the way we want it. So you see how, right, the long output here is a lot less when our opening price is further away from the upper strike price. And right, so here when the open price is closer to our strike price, the output here, the long output, is greater. Now there's one thing that I don't want is I don't want these short outputs here. So let's what if we do long only? There we go, long only. All right, and that fixed that problem. So I can see when the opening price here, when the opening price gets closer to our upper strike price, right, the output is increasing. So that's one comparison solver for checking the upper strike price. So now we need to build another comparison solver to check for the lower strike price. So what I'm going to do is I'm going to take this one that I built, let's copy it, and I'm going to turn off the upper one. So we're working with the lower comparison solver, and this is going to be checking the down, or maybe I should just call it the lower, and I'll just abbreviate this to upper. Alright, so we're going to be comparing to the lower. So my initial thought is, alright, I'll just change my absolute value to the lower strike price, and we'll see what happens here. Now, for the lower strike price, I actually want a short output. I want to see the short outputs on this one. So let's reverse this to short only, and I also have to remember to, I don't want to use the long outputs, right? I actually want to use the short outputs. So let's see how that works. So that seems to be working. Right, so right here our open price is actually above the lower strike price, and we can see BloodHound's output. You know, it's not quite 1, and we can see here all these opening prices are actually below our strike price, so that's why BloodHound's giving us a 1 output. Right, these outputs are all fixed at 1, and then we can see here on from this point over, right, we can see the opening price is way up here, so it's above our lower strike price, and we can see the output here is pretty small. And then as the opening price comes down and gets closer and closer to our lower strike price, we can see the output is increasing and increasing and increasing. So this solver here is kind of working, it's working the way I want it to. So I've got my 2 solvers set. So next step, I'm going to need to start working on the logic board. Alright, so let's drop our solvers on the board here. So there's our existing nodes. We'll drop those on there. And we're going to connect these 2 together with an OR node. So so now we can see both, you know, the long in comparison to the short. So let's just take a look at this one day here. We'll just take a look at this day right here. And I'll scale my chart. Oops. There we go. Scale it up like that. And so, you know, we can see, if we look at BloodHound's output here, right, we can actually look at the values, right? So the long value, right, is 0.852, and the short value is 0.898. So the short value is actually greater. So it's telling us that the opening price is actually closer to our lower strike price because this has a greater value. You know, and if we take a look at the next bar over, let's take a look at this next bar over, right? We can see the long output is very small, and the short output is essentially, you know, it maxed itself out at 1. So the opening price is definitely closer to the lower strike price because the short output is much greater than the long output. But let's go back to this bar here that we're working on. You know, this still isn't very easy to read, right? So how about if we build a system that eliminates the shorter value? So that, you know, we can build a set of logic that eliminates this long output because the value is less than the short output, right? So we can have BloodHound's logic only show us, you know, which of the long or short output is bigger than the other. You know, which one of these has a greater value, and we'll block the other one from plotting on the chart. So the way we can do that is we can use the relational node here. So this guy doesn't get much love. He doesn't get much use. But today we're going to use him to do this. So the relational here, right, we can see that we can do all kinds of comparisons, right? We're comparing, you know, A to B in various ways. We even have some mathematical formulas here. So look, we have A minus B or B minus A, or we can take the absolute of A minus B, you know, so we can kind of do some rudimentary mathematics on this. But in this case, I think what we just need is we just need to compare, you know, an A to B. And if we zoom in here, zoom into this node, right? So what we're talking about is input A and input B. All right, we're going to compare input A to input B. So if I take this output and connect it to A, right, essentially what that's doing is the output that we see on the chart now, this long output and the short output, is, you know, essentially the values here is what's going into A. Now we need to find a way to get, so really what we want to do, let me back up. So what we're going to want to do is, let's make the long side A and the short side B. So that way we can see if the long side is greater than the short output, right? So we're going to make sure that the long output is greater than the short output by doing, you know, we can use this comparison here. We can compare A to B. So we're going to have to build a system so that A represents the long and B represents the short. So how do we get the short into B? But also keep in mind that all of these nodes, so what we're going to do is we're going to have to do a little bit of tricking here. So the way all solvers and nodes work, the way all these function nodes work, is that this relational node, it's for A and B. So when I'm comparing this A to B, the way this node works inside is it only compares the long output to the long output. So the way I had this set up now, it's going to take the long output of A and check to see if it's greater than the long output of B node. And it's also checking it's comparing the short output that's going into A, right? So remember, this leader that goes from the OR node into A, this leader contains both the long output and the short output at the same time. So this comparison solver, when it's when we're checking A greater than B, it's checking the long side of A greater than the long side of B, and then it's also checking the short side of A to be greater than the short side of B. So what we're going to have to do is we're going to have to take this short output and essentially reverse it so that we convert this short output here into a long output. So that way this relational node can compare, right, long output to long output. But instead we're going to take this short output and flip it over, reverse it into a long output. So the way we can do that is with our long-short modifier. Let's connect that in there. So keep an eye. Let's keep an eye on this. Let's see. No, I didn't. Let me mark it here. So let's keep an eye on this bar here with this. Oops, that was a little too big. Here, I'll mark it here. So with our little tiny red arrow. So let's keep an eye on this bar, because this bar is going to be obvious, right? The long output is really small, and our short output is it's maxed out at 1. So let's keep an eye on that. So see, our long short modifier, right, its mode is defaulted to swap. So it's going to swap our long and short outputs. It's going to swap them. So let's connect that in and take a look. So look, now our long output is maxed out at 1, and our short output is small. See, they just got swapped. So if we take a look at just the OR node, right, the raw data come from the OR node, and take a look at this, right, so you see how it got swapped? So now when we look at what's coming from the long short modifier, essentially we know now that this long output here, this bar, actually used to be the short output from the OR node. So we got swapped. So that's how we were able to swap them. So now I can connect that into B. And so now we're going to be comparing the, so let's look at the raw output from the OR node. So in the relational node, A, we're going to be comparing A, which is the long side, the long value, and we're going to be comparing it to B, and B, remember B now is the short output that's been swapped to the long output. So now B actually represents this short output, which has been swapped by this node. It's been reversed by this node. So now let's take a look at our at this relationship node, and So now as we look at the chart, let me adjust the scaling here. So what the output's telling me now is that all of these opening prices here are closer to the lower strike price, right? To the 100 strike price, which is lower. And then when we get to this bar on the left here, right, that has a long output, it's telling us that our open price of this bar is closer to our upper strike price by giving us a long output. So essentially this has been accomplished. So let's do a little bit of testing here. So if we're looking at this 1 day here, and I need to shrink the chart up here, and it's strange, my lines don't show up, so I guess I have to show, yep, so I have to show 2 bars on here so that way my strike price lines show up. So let's do a little testing. What if we take the lower strike price and let's say we move it down, you know, down to 99 right there, right? And what I'll need to do is I have to go into the solvers here and adjust my strike prices accordingly. So remember, this solver below here is looking at the lower strike. So I'll change this from 100 to 99. And look, see how the output now is telling us that the upper strike price is closer by giving us a long output. And so let's do another little test here. Let's say our upper strike price was actually at 102. Then what we need to do is change the value of our upper strike price in the solver to 102. And now we'll take a look, and essentially we're back to, right, BloodHound's telling us that we're back to saying that, you know what, the lower strike price is now closer to the open price. So so essentially that's how you can check to see, you know, which value is closer to another value. You know, so just remember that you know, you could you know, with this kind of setup, you can replace the opening price, you know, with whatever you want. You know, this doesn't have to be the opening price. You know, so remember, you can go in here and use any price you want, or, you know, I could even, you know, replace this with a moving average. I could put the SMA in here and see, you know, and see if the, you know, a moving average is closer to an upper value or a lower value, right? So I can even, you know, I could replace this absolute value with I guess, say, like a pivot line, right? I could put, you know, I could use a pivot indicator in here, and, you know, so this strike price lines could be replaced by a pivot indicator, you know, so I could see if, you know, if the closing price or the opening price, you know, is closer, you know, is it closer to the upper pivot line or is it closer to the lower pivot line? You know, or I could check to see if a moving average is closer to the upper pivot line or lower pivot line, right? So you can, you know, put any kind of data value in, you know, in indicator A and indicator B to do your comparisons. So, right? Okay, so essentially that's that. That guy's done. And so I guess next And oh yeah, just so you guys know, Daniel's in the room today. I told Daniel that today was going to be a good one. I was really getting into some actual, so all of this stuff is new. I haven't been asked these types of questions before, so I just gave Daniel a heads up and told him he might want to watch this. So Daniel's in the room today, and actually, Daniel, here, I'll move you over to a panelist there.
So you can hear me now?
Oh, yes, I can, Daniel, so just be aware your mic is on.
All right, great. So. Hi, everyone. So yeah, I've been wanting to see use of the relational node. I haven't really had any conditions come up where I've needed to use it. And actually, I think the same guy that probably asked you about this asked me about it also, and I said, well, I didn't really know how we could do it. For one thing, I wasn't aware of any way that we could actually call to the strike prices of options. And like you're saying, I don't think NinjaTrader really gives options data, do they?
No, they don't. And yes, I did actually send that customer your way, or he might have been in communication with you first. So no, right? So that's why we have to use, since NinjaTrader doesn't have strike price data, we have to just manually put those strike prices in ourselves. And I believe, once again, I didn't get enough detail, but my assumption is that, that this trader is probably getting the strike prices, before the market opens from his broker, and so he could just manually, put the strike prices, in the upper strike price in, and the lower strike price in, and then just wait for the market to open, and and have BloodHound do that comparison for him, just like this. So, essentially, what we're looking at is, BloodHound's output is just saying, when it gives you long, it's saying, hey, use, the upper strike price is closer, and so I think that's what he wants to buy. And if the lower strike price is closer, BloodHound will give us a short output, and I think that's the option that he's going to purchase first. So something like that.
Pretty cool.
So
useful information.
I'm sorry?
Can you click on that relational node again? I just want to see all the different.
Yes.
Like I said, I haven't really used it that much. I think I've used it once. So we can do.
Yeah. So it's but has a bunch of greater than, equals, conditional comparisons, and it also has some math formulas in here. You can get A minus B, B minus A, so you can play with it. So if I do A minus B, let's do the absolute of A minus B. Let's see, well, yeah, so the absolute, essentially gives me the same value on both the long and the short, so that's not working in this particular case. But it looks like, yeah, it's working in this case. And of course, you can see the output is now varying. So it's kind of telling me, the difference. It's kind of telling me now, how much greater is the opening price, from one side to the other. And so, look, on this bar right here, we can barely see that there's a short output. And that's because the opening price is almost dead in the middle between these two strike prices, right? So it's almost dead in the middle, so that's why there's just a very little small output. And as the opening price, gets closer to the lower or the upper strike price, its output gets greater. So that's not really so convenient to see. So that doesn't really work. That's not the best solution. I found that this is the best solution. So, and when I was playing around with this, I was just kind of testing all different kinds of ideas, and just kind of seeing, hey, which one of these kind of works best. Found the first one did there. So, yeah.
I'm just trying to think of different applications, I guess. If you wanted to check whether you're closer to one moving average than the other, then whichever one you're closest, you could use that as the support or something, or resistance. I'm just trying to think of different applications for this. Could be a lot.
Yeah, yeah, you know, it's I guess you just kind of have to wait for the question first
That's what, yeah, exactly.
to figure out if this applies. Yeah.
Right.
So,
Very
all
cool.
right. Well,
All right, good
guys,
deal.
all right. So, I guess I'll build the simple one first. You know, which is the simple one first here is looking at the various price action here. So, let's see, bar one. Bar one is marked right here. All right, so we want this range candle one must be up, and range candle two must be up, and the close must be higher than range candle one. All right, so we need two up bars, and the second up bar must have a higher close or a higher high than the previous bar. And you know, then we can see that our third bar is actually a down bar, a reversal bar down. And let's see, and the range candle 3 must be down, must be a down candle, and close needs to be lower than the high of range. So in other words, we need a lower close. So this reversal bar down, the close needs to be lower than the previous bar's close. All right, so that's just a couple of bar direction solvers and a couple of comparison solvers. So let's work on that next. Okay, so let's switch back over to oil, and before I do that, let's lower the number of days. Alright, and we'll switch this to an 8 range. Alright, so we've got an 8 range here. I'll adjust that over there a little bit. So, alright, so I've got a couple of places here to work on. Right, so I can work on that. I can use that area, and I can use this area. Right, those look similar. Those look similar to this in right in here. Right, up, we got up bar, and then down bar. So that's kind of the price action requirement. So I have a up bar, and a down bar, and the same here, up bar, and a down bar. So I'll use these areas to build those conditions on. Alright, so I'm going to create a new logic here. And let's see, the name of this, let's see, I think this was being called like a volume spread. We're doing like a volume spread analysis. You know, essentially, kind of the key to this is actually the volume setup down here. So we'll work on the volume setup secondly. That's a little more complex. So I guess I'll call this the volume spread. Oops. Alright, so the first couple of conditions is pretty simple. We need 2 up bars in a row. So let's grab a bar direction solver, connect that in there, and the number of bars, we want the number of bars to be 2 in a row, right? And right, so you can see, look at BloodHound's output so let's see, right over here, right, we can see on our first up bar we get a partial long signal, and then on the second up bar we get a full long output there, and that's because our mode is set to percentage. So I'm going to set it to all or nothing, and that kind of got rid of the fuzzy logic part, right? So on our second up bar we get a long output. So that's kind of condition 1. The second part is we need to make sure that right, it's a higher high, right, or the close, the high of one bar is greater than the high of the next bar. So let's grab a comparison solver. And there we go. Okay, so with the comparison solver here, let's see. So we're going to see if the close of bar 0 is greater than the close of bar 1. Alright, so to get the closing price, actually, I'm going to take a little shortcut here. I'm going to just set this to the closing price. So that's the closing price of bar 0, right, or the current bar. Now to get the closing price of a previous bar, 1 bar back, I'm going to have to use this displacement and set it to 1, right? So that means I'm looking at the data 1 bar back to 1 bar previous. And so I'm going to have to use the SI chameleon indicator to get that price. So let's set this to chameleon, and I want the closing price, right? And so here we go. If we look at the output from this solver, every time the closing price is higher, we get a long output. And when the closing price goes lower than the previous bar, we get a short output. Like so. Alright, so there we go. There's that part, and essentially those are 2 requirements together. So we'll join this together with an AND node. And alright, so there we go. If we look at this, so let's look at this area right over here. Right, our first up bar is empty, but our second up bar is marked with a long output, denoting that we got 2 up bars. So right, so this condition 1 has been met, and condition 2 has been met. Right, where candle 2 must be an up bar, and the close is higher than candle 1. So now we need to work on candle 3. So candle 3 is right the reversal bar or down bar, and the close must be lower than the previous up bar to get a short. And we can see here, right, we're going to want a short output. We're going to want a short signal out of this. So knowing that, I can see that right now, right now I'm getting a long output. So I'm going to have to reverse these eventually to turn these into a short output here. So So I guess what we'll do is we can go ahead and reverse those now. So let's see, I think I'll just use the inverter. Alright, remember the inverter has this long and short swap, right? So that's essentially going to reverse them. And I don't want to invert, I just want to swap. So I'm going to turn the invert off, like so. And so now we can see these two bars now have a short signal on them, right? A short signal. So that part's done. Alright, now let's work on the down bar. So let's use another bar direction. Like so. Oh, I grabbed a bar length by accident. Just a sec, let me delete that. Okay, a bar direction solver, there we go. Alright, so there's a down bar. And we also need to make sure that the close is lower than essentially the high of the range bar 2, or the close. Because this is a range bar, it's actually going to be the closing price. So the high of a range bar is the same as the closing price when it's an up bar. So essentially we're kind of looking for price to reverse on this, is what we're doing. So I'm going to take the easy road, and I'm going to use the inflection solver here. So if we take a look at this, and we take a look at the inflection of the closing price. Right, so look, we can see here we have a short signal when price reverses down, like so. And what I can do is join these two together, and what this does is this makes sure that this reversal bar is a down bar, and also it makes sure that the closing price reverses down as well. So, you know, with range bars, you know, I know that technically, let's see, I don't think you can get a reversal bar without the close being lower. Actually, yes, you can. If you get a doji like this, right, that's, I don't know, that's kind of subjective. That may not be considered a down bar because it's just a doji. So using the bar direction, you know, makes sure that we don't have dojis, and actually makes sure that it is the body, that the bar has a body and the body is a down body. So, alright, so now what we need to do is kind of join these two together. Alright, so remember, this is looking at, you know, bar 1 and bar 2, and this is looking at bar 3. So we're interested in getting a short signal there, as we can see, and we're interested, right, in getting a short signal on this bar as well. So let's take a look at this logic over here. Well, look, as we take a look at this, we can see where our red arrows are. There's actually no signal here, right? Because, you know, this reversal bar is a down bar. It's not an up bar. So what we need to do is we need to take this short signal and shift it forward, one bar, shift it forward onto the bar, onto the reversal bar, right, with our arrows that are marked with the arrows. So if we want to shift this forward, we can use our look back node. And right, our look back node has this displacement setting into it. So this displacement is going to shift the signal forward 1 bar. So now let's take a look at that. So there. So see, now if we look at the reversal bars, we have a short, right? The short signal has been shifted forward onto our reversal bars. So now what I need to do is join these together. So I can actually just take this and I could plug it into that AND node and do like so. So as we look at the chart here, right, so this short signal, right, is correct for our price action, and so is this long signal here, because look, we got 2 down bars and then a reversal up. Same over here, we got 2 down bars and a reversal up. So right, so that's just telling us that, you know, the price action part of our logic is working correctly, right? And we got 2 up bars and then a reversal bar down, so that part's working correctly. So we've accomplished, you know, the conditions, you know, written up here in the price panel. Now we need to work on the conditions down here, analyzing volume. So let me zoom in here. Okay, so when we're looking at the volume, this kind of gets into a little bit of math here. So, you know, we can see here we're dealing with some percentages. So the first volume bar, which, right, the first volume bar lines up with the first price bar, right? Bar 1, bar 2, and bar 3 is our reversal bar on the price bars, and those line up with our volume bars, right? So we have volume bar 1, 2, and 3. Okay, so for volume bar 1 must be 20% taller than volume bar 2. And really, we can ignore the white and red, right? So all that's doing, all this volume up is doing, is the color of the volume is just matching the color of the bar. That's all it's doing. So we can ignore the, you know, the colors of the bar. That's really nothing significant. So it's just the color of the volume is just matching whether it's an up or down candle on price. So back to, you know, so back to the analysis of the volume here, right? So volume bar 1 has to be 20% taller than volume bar 2. So and then volume bar 3 has to be 20% taller than volume bar 2. So we can see we have this little dip in volume here that we're looking for. Alright, so let's add the volume to our chart. And actually I had my other chart set up already, but I'll set this one up in front of you guys so you can see how I'm doing this. Alright, let's see, I'll apply that. Okay, so here's our volume. And I'm going to add one more indicator on top of volume as a visual reference. So this is not necessary for the logic, but it is necessary so that you'll have a visual reference here. So what I'm going to do is I'm going to use Chameleon here, and you'll notice here Chameleon has this modify value property here. Right, so you can add a value to essentially you can add a value, to all of these price datas here, and you can scale them as well. You can add a scaling here, and so we're interested in looking when these volume bars are 20% greater than another one. So I'm going to set this to 1.2. So so that's 120%. Right, 1.2 is 120%. So I'm looking to see when a particular volume bar is 120% greater, or 120% of another bar. In other words, 20% greater. And now what I need to do is I need to put the scaling onto the volume, right? Because by default, Chameleon is looking at price data, right? Close, the mid price, the open price. But what I'm going to do is I'm going to have Chameleon actually look at the volume. So I'm going to feed the volume into Chameleon, like so. And let's see, I want to put it on panel 2, right? My volume is on panel 2 over here. So let's hit apply and see what this looks like. And great. So look, you see all these little green markers, these green hash plots? So that is essentially the high, right? That's this lime green hash here, right? Because obviously the volume, its low is going to be 0. Right, volume ranges from 0 on up, so the low bounds, or the low price of volume, is always going to be 0, and the volume itself is always going to be the high. And I think it would also be probably also the close. Let's see, let's take a look there. Yeah, it's also the closing price. In this case, they're one and the same, but let's just use the high. I think that probably makes more sense to most people, that we're looking at the high of the volume. Alright, so now, look, I have a visual reference now. So let me kind of find, let's see here. I'm going to find kind of an ideal situation to work on here on the volume. Okay, I think I found my spot. So let's, I'm going to work right in here. There we go. Alright, so I have this tall volume, a smaller one, and then the next one over is just a little bit taller than it. And I can see, right, I can see that this volume here is slightly greater than the 20%. Right, so remember, these green hashes here are marking the 20% greater than the volume, right? They're 20% greater than the volume. So, right, so I need to make sure that, let's see, so how about if I label these guys? Alright, I really need to make this these font size pretty big there. Okay, I think that works. Alright, so there's volume bar 1. And of course, this will be 2. and that'll be 3. Okay, so back to what I was, stating clearly. Bar 2 is less than the 20%, of volume bar 1, and volume bar 3 is, I can eyeball it using my crosshair here. It is greater than the 120% of volume bar 2, which is the green hash. All right. Okay, so we have a visual reference on the chart that we can work with. So now we kind of need to build, right, the same visual reference into BloodHound. So let's open this up. So essentially, what we're doing is we're making various comparisons. So what I'm doing is we're comparing the volume of bar 1 to the 120% of volume bar 1, and then volume bar 3 we're comparing to the 120% of volume bar 2. Right, so we're doing these two types of comparisons here. So let's add a comparison solver. Right, we'll connect it up like so. Alright, so we want to make sure that bar 1 is 20% greater than bar 2. So let's put bar 1 in indicator A. We want bar 1 in indicator A. Now, remember, bar 1 is 1 bar back. It's 1 bar back as compared to bar 2. So let's slide this over here. Alright, so we're checking to see if bar 2 is less than bar 1. So bar 1 is 1 bar back, so we're going to use a displacement of 1. And we need to switch this over to the volume. Now, we're not actually comparing to the volume of bar 1. We want to compare it to the SI chameleons scaled, right? 20% scaling of bar 1. So what we're going to do is we're actually comparing it to chameleon. Just as we see that we're comparing it to chameleon on the chart, we're going to do the same thing in BloodHound. So let's set chameleon up, and remember we need to set our scaling to 1.2, and we're interested in looking at the high price. Right, the green hashes are the high price, the high of the volume, and so right now, remember, chameleon's looking at price, but we want chameleon to actually be working on the volume. So the next thing I need to do is go down to the volume, and we're going to nest the volume here. Right, we're going to use the nested input button, and we can see now volume is now being fed into chameleon. So now chameleon's going to be working on the volume data, just like we did in the chart. Right? This is exactly how we set it up in the chart. All right. So indicator A is essentially the green hash of bar 1, volume bar 1, and volume bar 2 is just the regular volume. So we'll just switch this over to volume. Just as a side note, there is volume here, so I could take a a shortcut and just set that to volume like so. So this works in this case because if I go back to indicator, we don't need a displacement. Right? We don't need a displacement. So if I don't need a displacement, I could just set it to volume like that. But I'll keep it on indicator. It just I think it probably is easier to comprehend for most people like this. And all right, so let's go back to the original set of rules here. So as we're told, this setup that we're building is actually looking for a short signal out of BloodHound. Right? So this volume condition, we want a short output when this volume condition is found. Right? We want a short output, so let's keep that in mind. Because look, right now we actually got a long output here. We got a long output, right? And that long output is because the default settings, right? The default settings of this comparison solver is that, right, indicator A is greater than, right, this indicator A data, it's greater than indicator B data, right? So in other words, volume bar 1 is greater than volume bar 2, and so therefore the output, its default settings are to give us a long output. So we actually want to kind of change that around so we're getting a short output. But first, let's give this a name here. So let's see. So we're looking at volume 1. Volume 1 and 20%. Actually, 120%. We want it to be greater than volume of, volume 0, or 0 kind of represents like the current bar, and volume 1 kind of represents 1 bar back. 1 bar back. So that's what we're looking at, and let's see. So we actually want, let's clear our outputs. So we're blank. So really what we want is we want our short outputs, oops, there, like so, right? So we want a short output like so. And our long outputs, we're actually going to want, typically you want your long outputs kind of set the opposite of your short outputs. So we'll set a 1 in here because, right, this is the opposite condition of this condition. Alright, so we have a short output here as wanted. So now let's work on building a comparison of, bar 3, volume bar 3 to volume bar 2. So we want to make sure that the volume of bar 3 is greater than the 120% volume of bar 2. Right? So we're comparing volume to Chameleon's green hash mark. So let's grab another comparison solver. And let's give this a name. So it's going to be like the volume of 0. So essentially bar 3 is now the current bar. So volume bar 3 is now the current bar, so it's going to be bar 0. And we want to make sure that it's greater than the volume of 1 bar back, and we want to be greater than the 120% of 1 bar back. So let's set this up. So we want this to be the volume. Right, we just want the plain volume. And indicator B, we want that to be the 120% volume. So let's go find SI Chameleon again. And we want, remember, 120%, so I set the scaling up. And then I need to come back here and nest the volume into this. So there we go. I got the volume being fed into Chameleon. And remember, Chameleon, we want to use the high price to get that 120% value. And let's see, oh, one more thing. Change the displacement here. And so look, on volume bar 3 here, once again we got a long output. Right, we got a long output. So I need to change things around again. Let's set this to 0. Set our short outputs to 0. And I believe that's the output we want. And yes, there we go. Like so. And for now we can just kind of ignore this long outputs from the solvers. So for right now, we're just looking at the conditions to build a short signal. So we're just going to ignore the long outputs for now. And we can see here that right on these previous volume bars, right, each one of the volume is greater than the previous volume's 120% value. Is volume stepping up? Now, let's take a look at the first comparison solver that we built. Let's take a look at this. And look, our short signal is on bar 2. But remember, our signal is going to actually happen on bar 3. Right, so let's take a look at our set of rules. So remember, our short signal here actually happens on bar 3. Bar 3 of the volume, right, and bar 3 of price. So I need to take this short signal that's on bar 2 and shift it forward to bar 3. I'm going to take a little shortcut and use the look back node. Shift that forward like so. And so look, now our short signal is now on bar 3. Okay, it's been shifted forward onto bar 3. So the next step is to join these guys together with an AND node. Okay, so ultimately, here is our short signal, right? We got a higher volume, lower volume, and a higher volume. And look, we actually have the same thing over here too. Right, we have the same thing here. So this volume bar is higher than this volume bar, and right, the last volume bar is higher than the first one, than the previous one. So we get a lot of these conditions. We're finding a lot of these on price. Right, we're kind of seeing these happen all over. Right, here's another good classic area. However, the next step, though, is to join our volume condition with our price action condition, and see what we get left with there. So let me shrink up my chart a little bit. Right. So what do we want to do? So let's see, what I can do is I can connect this AND node to this AND node and take a look at that. So let's see, what do we get? So let's take a look at this guy right here. So we got 2 up bars and then a reversal bar, and if we look at our volume, right, our volume here is higher than the next volume, and this volume is lower than the volume on the signal bar. So technically that's all correct there. Let's see. Oh, looks like we got a bust. Okay. Yeah. All right. So we got some quirk in our system. So let's figure out what's going wrong here. All right. So this volume bar is definitely smaller than the second volume bar. So let's see. So let me move these numbers over here. So alright, so volume bar 1 definitely violates our rules, and actually so does volume bar 2 to 3 actually violates the rules. So this actually looks like it's in an opposite kind of condition here. So yeah, that's strange. So that's not what we want. So let's kind of take a look at the problem here. Let's see. So our long output is definitely not what we want. So let's see if this output here works. And let's take a look at our rules again here. So let's take a look at our rules for our long signal, right? So the price, basically this price action is kind of reversed here, right? 2 down bars and then an up bar. And let's take a look at volume. Alright, so volume, we do want volume to be doing the same thing, right? Bar 1 should be a greater volume, bar 2 should be a smaller volume, and bar 3 should be once again a greater volume. So let's yeah, so since we want volume to kind of make the same pattern regardless of it being a long setup or a short setup. We want volume to still be making the same pattern. So actually, look, you'll notice that. Let me set this to 0. So this is how I set it up originally, because typically, typically you want your long output to kind of have the opposite condition of your short outputs. So typically most conditions call for this. However, in our volume condition, right, we want our volume patterns to be the same regardless if it's a long signal or a short signal. Right, so this is a long signal. Our volume pattern is the same as our short signal, right? It's kind of same volume pattern here. So really, when we're looking at our volume conditions, we want a long and a short signal at the same time. And to get that, what you do is you set your long output and your short output to the same condition. And so you see how right, we're getting a long and a short output on the exact same bars. And so I need to do the same for this other comparison solver. Like so. So now let's take a look at this. Alright, so now this is making a little more sense. So if we look at, right, 1, 2, 3, we can see there's no output here on 3 anymore. But look, here's an output. So let's take a look at this. 1, 2, 3. Actually, this does match our pattern. Look at this. We have a bar 1 is a greater volume, bar 2 is a lower volume, and bar 3 is a greater volume again, and it got marked. Both long and short. So now we just have to let price action to determine if there's actually a long or a short signal here. So now let's take a look at this. And so look, no signal, because look, price action didn't match up. Unfortunately, yeah, I can see here, right, we got 2 down bars and an up bar, but our volume basically happened 1 bar too late. Our volume setup happened 1 bar too late. So, all right, so let's take a look at some more of these signals here. So basically we're going to go through and kind of validate some more of these. All right, take a look at this. Okay, price action is correct. And let's take a look at volume. All right, volume 1 is greater than volume 2, and volume 3 is greater than volume 2. So that all looks correct. And all right, let's take a look at the next one over here. All right, our price pattern looks correct. And take a look at volume. All right, so volume bar 1 is greater than volume bar 2, and volume bar 3 is greater than volume bar 2. So that all looks correct. So far, so good. And yep, this guy looks good too. Price looks correct, and if we're looking at our volume, you know, I think that's pretty easy to see that the volume looks correct as well. So we get this little dip in volume. Alright, let's kind of look forward on the chart. And alright, so price action looks good on both of these. And our volume, yeah, look at this. Yep, we get the little dip in our volume, and we get the little dip in our volume. That all looks good. Right, same here. Get our dip in our volume. And keep in mind, when we're looking at this, we're comparing this to this, and we're comparing this volume to Chameleon. So remember, this is the visual comparison that we're doing on the chart here to make sure that the volume has that correct dip in it. So I think that does it. Yeah. And you know, I gotta say, he's not too shabby here. Not too shabby of a setup. Looks tradable, definitely. All right. Yeah, this guy's done here. So here, I'll just do a little clean up here. Kind of get these looking nice and pretty. Actually, here's a good thing to do. So let's see. I'll call this the volume dip, and let's see. This guy here is actually the price action. This AND node is actually looking at bar 1 and 2. Here, I'm going to actually disable some of this stuff here. Alright, let's see, actually, alright, so this is actually looking at, not bar 2, sorry. It's looking at bar 3. So this is the logic looking at bar 3, the reversal. This logic over here is looking at bar 1 and 2. So let me pull up the screenshot again here. All right, so looking at our set of conditions again, right? We got bar 1 and bar 2 up bars, and our bar 3 here is a reversal bar. So as you look at this, right? This AND node is, remember, looking at bar 1 and 2. These two solvers are looking at bar 3. And what I can do is drop another AND node in here. And so this AND node is basically looking at the whole price action. Well, I like to kind of keep the name short here, so that's looking at the whole price action. And remember, this AND node here is looking at the volume dip. And then the next thing to do is to join essentially these two sets of logic together. So naming your logic nodes here is kind of helpful to remind you, what's kind of going on in all this. So there. All right. Asif is asking, all right, could you please show me when the 20-period linear regression is at reversal bar, and either the midpoint of the reversal bar or above the midpoint for up bar. Let's see, and the same for a down bar. Let's see. Okay. Sif, I think I understand what you're asking. Let's all right, so we're kind of comparing the linear regression, I guess, to the reversal bar's midpoint price. Okay, so we have a comparison. We're going to be let me add the linear regression onto the chart first. Alright, so we're going to use the 20 period. And let's make this a little thicker. Okay, there's our linear regression, and we're looking at reversal bars. So okay, there's a reversal bar. There's a reversal bar. Right. So we got a couple of reversal bars we'll pick on here. And let's see, we're interested in the midpoint price. So let's add another indicator on here. Let's add chameleon. And I can set chameleon up to mark the midpoint of the bar. So I'm just going to turn the high and low price off, and so there's our midpoint price. And how about if I'll set it to white, and let's see, it's a dash, actually it's a dot. Let's see what that looks like. I'll make the dot a little bigger, see if that looks a little better. And since I have my chart scaled up so much there, I'll try 3. Okay, there we can see the little white dot inside the middle of the bar, so that's our midpoint price. So that's just for visual reference. Alright, so we're going to compare the linear regression to the midpoint price. So once again, let's use a comparison solver. So and let me read here again. Okay, so we want the linear regression above the midpoint for a reversal up bar. Alright, so let's finish setting up this comparison solver. Alright, so we're comparing the linear regression. So let's set this up to our linear regression. And we want the 20 period. Oops. 20 period. And we're comparing it to the midpoint price. So we want to set indicator B to the midpoint price, and we're going to use chameleon to get that. Let's see, so there's our mid price right there. And alright, so as we look in our chart, right, whenever the linear regression is above the white dots, we're getting a long output, like so. And the next step is that we're interested, so the next part of the conditions is we're only interested in the reversal bars. So let's use the inflection solver here, and we'll set this up to look at the close price, and we'll just change our type here to the closing price. And so great, now we can see every time, you know, right, the bar reverses. So you know, some of you guys might want to be using this on the Renko bars, right, the Pro Renkos or the Unirenkos, so you get, you know, a much smoother look. And the next step is to join these two requirements together with an AND node, because they both have to happen at the same time. Let's take a look. Yeah, so there we go. And I think some of you might be using this on the Renko bars. Alright, so 5, we'll set that to 5-1, and let's just set it for 2 days. Take a quick look here. Alright, so here we go. Okay, so we got some long signals and a short signal. These are reversals, no signal there. So, like so. Looking at this, it looks like this is kind of, for the most part, it looks like it's kind of identifying chop zones. Oh, no, right there, that was a good long signal. I wonder if we do a quick modification, if it might help this. So here, right, hold on, let's take a look at the comparison solver by itself. So let's see what happens. Instead of the linear regression needing to be above the midpoint price, right, let's see what happens if we actually reverse this condition here. I'll set that to 1 and clear out the short output. So now we can see when the linear regression is below the midpoint, right? Remember the midpoint are the white dots. So whenever the linear regression is below the white dots, our midpoint price, we're getting a long output. And so let me set one of my short outputs, right? I set all my short outputs to 0. So I need to I'll set the opposite condition of the longs. So there we go. Alright, now it's going to take a look here. Let's see what we get now. So let me go back in the chart a little bit. Take a look at this. I don't know. We got a bunch of like 1-bar reversals getting marked here, so who's to say which is better? But you know, I imagine that this is just a small component of a CIFS system here. It's probably just a small component. You know, add this you know, set of logic in with, you know, some other conditions as well, and you know, it probably acts as a good filter for some of these reversals. So all right, I hope that helps us. If and all right, so yeah, John is asking if I could add another rule. Let's see. All right, so John is saying that the price action must be above the 34 EMA for a long, and vice versa. Let's see, what time is it here? All right, so to do that, that's pretty simple. We're just going to add another comparison. So we're going back to, let's see, let me change the chart here, back to an 8 range. And let's see, what was it? It was EMA 34. All right. So John wants to add an EMA 34. Okay, so our EMA is red. And all right, so essentially for a long setup, we want to make sure that we're above our EMA, and for a short setup, we want to make sure that we're below our EMA, so we could actually cancel this short setup out. So that's going to be pretty easy. Just add another comparison solver there, John. So let's go back to the logic here. So this comparison solver, I'll zoom in a little bit. Let's connect this up. All right, so let's we'll compare. So the closing price, essentially, price is moving faster than a moving average does, right? So let's just say, so our closing price is, you know, the faster moving data set. So we'll put the closing price in indicator A, and we'll put the EMA down in here in indicator B, because the EMA moves a little bit slower than price does. Actually, quite a bit slower. All right, so let's change that to 34. And there we go. All right, so we can see we got a nice little filter here. So price has to be above the EMA for a long, below the EMA for a short. And if we take a look at our signals, and so now, let me name this guy. Always remember to name your solvers here. To the EMA 34. And I'll slip that guy right there in the middle. Oops. Here, drop that down a little bit. And so let's take a look at our chart. Let me shrink this up a little bit. Okay, so keep an eye on this short signal and keep an eye on this long signal here. So as soon as I connect this up, bingo, there we go. See, those two signals disappeared. So, right, this short signal disappeared and this long signal disappeared. So, right, pretty simple. Right, pretty nice. Yep, pretty simple to add that little filter there, just a comparison solver, and you just, since it applies to the completed, I guess, setup, since this EMA condition applies to the complete system setup, we're just plugging in to that anode there. Alright guys, we'll end it here, and I hope you all have a good weekend, and I hope to see you all next Friday. Alright, bye bye.